I'm sitting down with Treasury Secretary Janet Yellen. Thank you so much, Madam Secretary, for joining Bloomberg.
Thanks for the invitation.
We're in Stafford County. This is
Yes.
a county that Trump won in 2016, but flipped to Biden in 2020. And you're here to talk about the fiscal agenda that we've seen out of this administration, you're going to highlight this millions of dollars to broadband in rural areas like Virginia. Yet when you look at consumer sentiment, recent on Friday, the Michigan survey, when you look at recent polls, inflation remains top of mind for American voters. How do you get them to potentially look at the way you look at how the economy is working?
Well, the cost of living in many areas is very high, and it is a concern to Americans. And it is President Biden's top priority to do all he can to bring down the cost of living. Why I'm here in Stafford County, though, is it really illustrates one way in which that's going to occur. I'm looking at an area that has been deprived, has had really no access to the internet at all, sufficiently remote part of Virginia, and President Biden has made a commitment that every American household and business should have access to the internet. And funds that were included in the American Rescue Plan that was passed in 2021, and then later the bipartisan infrastructure bill provided substantial funding to make sure that the internet is available everywhere, and that it's also affordable. And what we saw during the pandemic is that access to the internet is critical to education, to jobs, to healthcare. And it's really a critical tool that every family needs to have access to. And so making that available and making sure it's affordable, which is what I'm going to be seeing here today, a project that has succeeded in reaching about 700 households in this area. This is one way in which President Biden's working to lower the cost of living. But there are many other areas as well. Prescription drugs brought down the cost of insulin to $35 a month, working very hard to bring down the cost of energy. At the same time, we're protecting the environment and bolstering the finances of households by extending the child tax credit and earned income tax credit.
If inflation, though, is still top of mind of Americans today, why then tomorrow, where it's likely expected the Biden administration is going to lift the walls even higher when it comes to Chinese goods, why then raise tariffs?
The president believes that it's critically important for the United States to have a role and a presence in strategic industries like semiconductors and like clean energy that are going to be the foundation of good jobs and national security in the decades ahead. He believes it's unacceptable, as I do, to be completely dependent on China in these areas. And he wants to make sure, given that China is really not playing by the rules in the sense they have enormous subsidies in critical areas of advanced manufacturing, has resulted in overcapacity. He wants to make sure that the stimulus that's being provided through the Inflation Reduction Act to support these industries, and these are industries that are creating good manufacturing jobs in parts of the country that have been overlooked or have suffered from deindustrialization in the past. The president wants to make sure that he protects these investments. And I don't want to get ahead of the 301 review on tariffs, but this is a commitment that President Biden has made, and I agree with it. I was in China just a couple of weeks ago and made clear that we would not allow Chinese overcapacity to harm our emerging industries.
Does the U.S. want a trade war, though, with China?
We believe that we should have a deep and productive, and that we do in most areas, trade and investment relationship. We're working to stabilize our economic relationship. We do not wish to disengage from China economically, but we do think that the playing field should be fair. And China engages in unfair practices like massive subsidies of industries they've decided are critical. And those are cases where we will act to protect ourselves.
We've seen Beijing in the past, though, respond, and it's become tit for tat. Are you expecting a response? Could they go after Tesla or maybe American farm products?
Well, President Biden believes that anything we do should be targeted to our concerns and not broad-based. And hopefully we will not see a significant Chinese response, but that's always a possibility.
China is big focus going into the election. We hear the former president also talk about how he wants to put a 60% import tariff potentially on all Chinese goods. He also over the weekend was talking about the Trump-era tax cuts that are set to expire next year. Trump over the weekend said Biden will give you a tax hike. If it was up to Trump, it would be a cut on upper, middle, lower, and the business class. Are you envisioning these tax cuts to be extended?
Well, what President Biden has said, and I certainly strongly agree with it, is that we want to make sure that working families earning under $400,000 are not faced with a tax hike. But all of the wealthy individuals and corporations that benefited from the Tax Cut and Jobs Act, where there are provisions that are going to expire, the president, for the sake of working families and tax fairness, believes that the rich and corporations should pay their fair share. And I would say that CBO, the Congressional Budget Office, recently estimated that extending all of the provisions of TCJA would cost $5 trillion over the next decade. And we really do need to be on a fiscally sustainable path. The president has already signed and put into effect $1 trillion of deficit reduction over the next decade, and he's proposed in his 2025 budget an additional $3 trillion worth of deficit reduction. It really is critical that we are on a fiscally sustainable path. So TCJA, the bulk of the benefits went to the wealthy and to corporations. It blew away the deficit. It caused huge increase in the deficit. It promised an investment boom, and we didn't see it.
So should tax revenues be used to lower the deficit?
Yes.
And is that the plan for Biden, or will they go to social programs?
Well, President Biden believes it's important to invest in areas of the economy that will help us grow and create good jobs. And his budget is one that proposes helping working families and undertaking investments that are critical to our future, but also raising taxes on wealthy individuals who he believes are not paying their fair share, and raising taxes on corporations that are doing extremely well. And he would both invest in America and help working families and lower the deficit.
The U.S. at the moment is spending just as much every year at this point on paying off our debt as it is funding our military. Does the U.S. need lower interest rates in order to balance the budget?
Well, we have to take the interest rate path that prevails in the economy as given. The president's budget incorporates the assumption that interest rates will be in line with the projections of private sector forecasters. So there has been an increase in the interest rate path that's assumed, and it's necessary to make sure that we're on a fiscally sustainable path. Of course, the higher interest rate path makes that more difficult, but the president's budget would hold the, I see the key metric that summarizes the burden of deficits as being its interest cost. And the president's plan would hold interest costs at historical levels and not allow them to rise above that.
The federal deficit, though, now is at a level we really don't see outside of recessions. Is anyone in Washington seriously concerned about this? Real conversations about bringing debt back to a sustainable path?
Well, as I said, the interest cost of the debt is a good way to measure its burden. Generally, interest rates have been lower in spite of recent increases. They have been lower than they were in past decades. And that means that metrics like the ratio of debt to GDP, we can probably manage and have a fiscally sustainable path with somewhat higher ratio of debt to GDP. But it's important to make sure that the real interest burden of the debt, which is a measure of the burden it's placing our economy, we have to make sure that that stays in historically normal level.
This isn't just a complaint of fiscal hawks either. This is a complaint I heard a lot at the IMF World Bank meetings. A lot of countries are lining up, concerned about the path that the U.S. is on and what also that means for the U.S. dollar. Heard a lot of people reminiscent of the Nixon times say, the U.S., it's our currency, but it's your problem. Is it right in that context, then, that other countries should be intervening?
Well, our position is that major countries like those in the G7, and this has been agreed in the G7, should have market-determined exchange rates. And if intervention occurs, it should be rare, well communicated, and largely to address excessive fluctuations in currencies. That's the system that we essentially have in place, and I think it's worked well. And of course, differences in the stance of monetary policy across countries is a factor that influences the value of exchange rates.
I'm sure this is going to come up on your next trip. You're going to be meeting with your G7 partners in Italy. There have been reports that Japan has intervened twice. You've said it should be communicated, this should be rare, but they actually haven't worked. So why does it matter?
Well, look, I'm not going to comment on a situation in a specific country. I just want to leave it as when there is excessive volatility, it's possible for countries to intervene. It doesn't always work without more fundamental changes in policy, but we believe that should happen very rarely and be communicated to trade partners if it does.
Just on a final point, and in this FX world, you're going to meet your G7 partners. Do you have a currency pair that you watch the most?
I watch certainly the value of the dollar vis-a-vis major currencies like the euro, the yen, the renminbi, but watch currency developments generally.